Hey traders, for those that don't know me, I'm a top author on the TradingView platform and I trade mainly Forex. Now this will be the first of a long series of episodes that have the objective to help you have a broader view of how you're supposed to approach the market and how to use multi-timeframe analysis to find high probability entries. So I will be proposing here for you guys on this YouTube channel my videos, my analysis, my breakdowns for you all together here in these videos. Let's get into it.
So let's speak about USD CAD, and we will integrate the analysis with some educational content about what we're actually applying to this analysis. So starting here, we are on the monthly time frame. As you can see, now some general thing I would like all of you to know. When you're analyzing the market, the first thing you need to know is that monthly, weekly, and daily, and obviously I'm speaking about swing trading, monthly, weekly, and daily are for direction. The 4-hour time frame is for entry. This is the best combination of time frames you can use for your swing trading. So monthly, weekly, and daily are for direction, and the 4 hours is for entry. Now, here on the monthly time frame, there are basically two patterns in play, a big one and a small one, and these two patterns are actually the same. We have, starting from this high all the way to this low, up, down, up. Now this pattern is a bearish W. What defines a bearish W? You need to have a high, you need to have a low, then you need to have a lower low, a lower high, then you need to have a lower low. So you need a high, a low, lower high, lower low, and then what you're expecting is either a lower high or an equal high. So equal to you need a high here equal to this high here, so either a lower high or at maximum an equal high before the next push to the downside starts. This is how a bearish W looks like and how it works. Now, continuing with our analysis, we can zoom in on most recent price action. Zooming in on most recent price action, you realize that we have a high, a low, a lower high, a lower low, and obviously what we are expecting is a lower high again for the push to the downside. Now, with this said, how are we supposed to take our targets on the monthly time frame? Pretty clear. We will take them in a very simple way by using our Fibonacci tool, because we know that when the market moves to the downside, if we want information on this retracement, we need to take our Fibonacci from this high to this low. However, if we now want information on the impulse to the downside, we need to take our Fibonacci from this high here to this low here and use the extensions of the Fibonacci's. Let's do this to understand immediately what I mean by this. What you're supposed to do is taking your Fibonacci from this high to this low, and in this way you will get the first target, that is your 1.27. What I will do, I will give you guys immediately the levels so you can read them. This will be the minus 0.272 Fibonacci, which is target 1, and this is target 2. But let's concentrate on target 1 since this is the monthly time frame, and this push to the downside is already a big push. It's a lot of pips. We're talking about moving from 1.3250 to 1.2920, so big amount of pips. Now this is very important to say. This is the overall target based on the monthly time frame and the pattern. And we took it simply by taking our Fibonacci on this leg here, which gives us information on this. Now, another thing that we are supposed to do from the monthly is that if we want information on this retracement, we need to take our Fibonacci on the impulse. So let's do it. Let's take our Fibonacci from the high, that is actually the high of this red candle here, and the low. What you will realize is that the market hit the 61.8. The market hit the 61.8 and is now starting the push to the downside. The analysis is now complete on the monthly time frame, and let's move to the weekly time frame to get more understanding of how price action is developing. Let's go on the weekly and see what's going on. Now on the weekly time frame, it's pretty clear that we have another impulse leg. The market started from this high here and ended on this low here. This is the impulse leg. It's pretty clear to see it. The market goes down, up, and again down. So if you now want information on this retracement here, if you want information on this push here, as I just said, you need to take your Fibonacci on the impulse leg. So let's do that. Let's keep charts clean and let's take our Fibonacci from this high to this low. Immediately once you do this, you realize something very interesting. The market already rejected the 78.6. Now after rejecting the 78.6, the way in which the market likes to move is by testing the Fibonacci levels one by one. So the market already rejected 78.6. We are now rejecting the 61.8, and then we will expect a rejection of the 50%. But at the moment, the market already rejected both the Fibonacci's, confirming that we have the possibility and the probability of continuing the push to the downside. Again, let's search for further confluence. Also here on the weekly, it's pretty clear that we have our impulse correction and impulse scenario. This is the most common pattern in the market. You have an impulse, you have a correction, and again you have another impulse with the creation of a lower low. So a low that is lower than this one here. So keep going with our analysis. Let's talk about structure here on the weekly time frame. If you go on the line chart, it's pretty clear to see that we have around this area resistance. Now why did I go on the line chart? With the line chart, you will find very strong support and resistance levels given by the closes in the market. So weekly closes are very important. And as you can see, if we move back to candles, you can see that every time the market hit it, it was respecting it as support and resistance. Once the market broke it to the upside and retested it, the market rejected aggressively. And now that the market comes from below, the market is again rejecting it, as we already expect. Now what are we expecting? We already know it. We want to see continuation to the downside, and from a structural point of view, we are at the moment below all levels of support. So we want to see a push at least to this low. Now let's keep going with our analysis and let's move on the daily time frame. Now on the daily, again, we have very interesting price action. The market started from this high here and went all the way to this low here with a nice impulse leg that broke below the previous support. You can see that the market had support around this area, then it broke to the downside, and at the moment we are retesting the area. Now let's do something very nice. Let's keep charts as clean as possible and identify our previous support area, because as you guys know, when the market finds support, so basically we find support here, let's speak about it in a more clear way. We have an impulse, correction, and again an impulse. Now when the market hits this area here, we have the resistance given by this high here, because last time the market went here, it found resistance. Now when the market breaks this area to the upside and goes back into it, this area of resistance will become support. And this is why it's important to identify those areas. So the market hit this area and went to the upside, so it means it found support around this area. Now when the market broke to the downside and went for the retest of the area, this area becomes resistance. So we are inside of a resistance area. This is all you really need to know from the daily time frame. But another thing we want to see, let's take our Fibonacci from this high to this low, because obviously if you want information on this retracement, you need to take your Fibonacci on the impulse leg. And as you can see, 61.8 already rejected. Very nice to see this. Let's keep going with our analysis. Let's go on the 4-hour time frame. On the 4-hour, it's pretty clear that we had a very major rejection candle. The market went for a retest of the high, closing the gap. Now on this chart you will not see, but actually from here to here we have a gap in the market, and the market retested this high here, creating this very nice rejection candle. Now at the moment, what we need to see before we can execute a position is we need to see the market break this low. Once the market will break this low, then we will be ready to take the short and we will have a very good risk to reward. This is all for USD CAD and what we have in mind from the monthly, weekly and daily. Monthly, weekly and daily is for direction, the 4-hour is for entry.
So I hope you enjoyed the video and took value from it. Make sure you go follow me on Instagram and TradingView so you will be notified live when my new analysis comes out. The objective is to understand which are the two main questions you're supposed to ask yourself when you're analyzing the market. Is the market in a support or resistance area, and what kind of pattern do we have? Those are the two main questions you're supposed to ask yourself when you analyze the monthly, weekly and daily time frame. 4-hour time frame is just for entry. Now, if you have any question, make sure you leave it in the comments below. If you want to support me, make sure you leave it in the comment below. And also, if you have any requests on pairs you would like me to break down each week, or if you want me to make any kind of tutorials because you didn't understand something about the video, make sure you leave it in a comment and smash that like button. And I will see you in the next video.